Welcome and thank you for joining us today. First of all, I hope everybody is safe and healthy. My name is Ryan Burke and I'm the Director of Customer Education at Duda. Most of you, I believe, are aware of Duda's response to the COVID-19 crisis. We have rolled out several new offers and features, which I hope you have found helpful. If you want more information about what we've been doing, you can read about it on our blog and support portal. As another resource, we've asked experts from an accounting firm called Armanino LLP to join us on this workshop and talk about how to navigate the various US federal aid programs that are available right now. If you're outside the US, we realize that this might not be relevant to you, so we've also asked the experts to work on locating some global resources, and we're going to make those available as part of the follow-up resources to the workshop. The agenda today consists of 45 minutes of content and then about 15 minutes of Q&A. So please submit your questions and we'll do our best to answer. Now I would like to introduce David Miller and Jen McCabe from Armanino. David specializes in providing client service and CFO support to emerging and growing businesses in the franchise, technology, nonprofit, and entertainment industries. And Jen has more than 25 years of outsourced HR and accounting and finance experience with a particular expertise in startups and the advertising and creative production industries. So David and Jen, welcome and thank you for joining us today.
Ryan, thanks very much. We really appreciate the opportunity to speak to everyone today.
Let's start going forward.
All right, here we go. So here we go.
Is the slide not advancing for you, David? There you go.
There we go. There we are. Okay, we've done that part. Can you make it go forward?
There you go.
I see this
David,
would
are
help.
you still there?
I
Okay,
see that
David,
I see that I somehow muted myself. Let's keep going, shall we?
All right.
Hi, everybody. I'm David Miller. And so here's an overview of our firm. We are as it says, we're the 20th largest CPA and consulting firm. We're the largest California-based professional services firm, and we do not only consulting, but we're also a tax and audit firm. And we also have other services. We're highly rated with our client-centric and customer-focused approach. We rank up there with some of the best in the industry, including Amazon, Acura, and Google. So enough about us. Let's keep providing some information for you guys. And here we go. Going down to the next slide. Yes, I am. Perfect. So today we're gonna cover a number of topics around the CARES and Paycheck Protection Program. We're going to talk a little bit about the economic injury disaster loans that are out there, and talk about some of the more recent updates and guidance. This information is changing every day. And then, as Ryan mentioned, we'll cover some FAQs on the back end of this process. And certainly, if you have questions along the way, chat them in the box. Ryan's going to be monitoring that along the way. We'll do our best to address your questions near the end. Okay. All right, so let's talk about the programs that are out there and kind of give you a high-level snapshot. So the PPP, as we mentioned, is the Paycheck Protection Program. That is a loan, and it's a maximum loan facility of $10 million. It has terms right now of 1% with a 2-year maturity. Now that had changed early on. It was originally 0.5% and a 2-year maturity, and it's slightly It has some different information in the CARES Act, but what the banks are doing right now is 1% with a 2-year maturity. The basis of the loan amount is on payroll costs. Now, what's in payroll? Great question. We're going to cover that as we go a little bit deeper into this conversation today, so stay tuned. This particular program is funded by the banks, not by the SBA. We'll cover that in a minute, but you have to go directly to your banks. The time to funding. So this is interesting because we actually have some late breaking news on this. So you're going to go through the process with the bank, and what we're hearing is it's probably, even once you get your loan approved, it's probably going to take 3 to 4 weeks till you actually get the funding. So we'll talk more about that. The forgiveness, the one really unique characteristic of this Paycheck Protection Program is there is a forgiveness element to it, which is basically 8 weeks, and we'll talk more about the details on this, but the headline is there'll be a forgiveness period of the use of funds. Basically, it covers about 8 weeks after the loan origination date. In this loan, unlike other SBA loans, there is no personal guarantee required. There's no collateral required. And the application is fairly simple. A little bit of the details behind the application are a little bit more complex when it comes to the payroll calculation. But the application is fairly simple. It's about 2 pages, and it's pretty straightforward, and again, does need to be submitted directly to the banks. On the back end, this forgiveness requirement is complex, and there's some limited amount of guidance on that process at the moment. But again, we'll talk more about that, but I'm sure that's going to be much clearer, and there'll be more guidance over the next several weeks. We'll be sure to share that. So, the use of funds is really, really important. So that it's specifically to be used to cover the cost of retaining employees. So the intent of the loan is 8 weeks, and it's really there to cover the use of retaining employees over that 8-week period. And also a portion of it can be used, and there's some caps on it, we'll talk about that later, but a portion of it can be used to pay rent, to pay utilities, and interest on mortgage debt. It cannot be used to pay off debt or any other sort of pieces. If you do use it for that, there wouldn't be any forgiveness element to it, and they may even take it back. So the other program is the Economic Injury Disaster Loan. Now these loans, this is the typical type of loan that the federal government and the SBA has had in place for things like hurricanes and earthquakes. This has been around a long time. This process is a process that is done directly with the SBA. At the moment, it is currently an online process. More about that later. But the maximum loan amount for this is $2 million. It is a true loan. There is no forgiveness element to it. The interest rate percentage is 3.75, and you can finance it up. You can pay it back up to 30 years. There is a 2.75% maximum for nonprofits. This one in particular is based on particular need, so you have to be able to describe the type of need and how your business has been impacted. Again, it's funded by the SBA, where the PPP is funded through the banks, guaranteed by the SBA. The Economic Injury Disaster Loans are funded directly by the SBA. The time to funding, again, we're estimating 3 to 4 weeks. There is no forgiveness calculation. There may be a personal guarantee or collateral required. Certainly over $200,000 loan request, for sure, something of that nature is going to be in place. Under $200,000, again, according to the CARES Act, there may be a waiver for that. We'll cover that a little bit more as we go. Application requirement, while we're saying it's complex, what we've uncovered in the last 24 hours is and I'll cover the next example in a minute, but it is an online application process. The historical process for an economic injury disaster loan was fairly complex. It was a number of forms. It required a lot of backup, particularly not only for the company, but for ownership structures, for owners that had more than 20% ownership. So there was a lot of complexity. That's not to say that won't be asked for, but right now, just to get into the process is fairly straightforward. The compliance requirement, again, probably a little bit more simple. There's more latitude in how you can use the funds. And yes, you can get both an economic injury disaster loan and a PPP, but you cannot use the funds for the same things, right? Whatever you're using the PPP for and get forgiveness, you're not going to use the economic industry disaster loan. Okay, this last facility is a little bit tied to the economic industry disaster loan, and it's the emergency economic injury grants that are out there. And It's a $10,000, and as it's in the application process, it's an online application process. It's directly with the SBA. Right now, the EEIG and EIDL application process is exactly the same. At the end of the application, it'll ask you, do you want a $10,000 advance? You tick that box, that's what you will get. You will get it. It's deemed a $10,000 advance. If for somewhere down the line you don't get an economic injury disaster loan, or you're denied an economic injury disaster loan, in the CARES Act, it specifically says that $10,000 is expected to be forgiven. So, but the $10,000 is designed to get money to individual proprietors, sole proprietors, small businesses, get it to them quickly with the 3-day funding. I can tell you on a fact-based basis, no one's gotten their funds in 3 days at this point. As recently as yesterday, I've spoken to someone who applied early on in the process, specifically related to this, and is yet to receive the funds. But again, we're watching it day by day, and I'm sure as the SBA gets caught up, they'll be able to start funding some of the stuff. There is a forgiveness element to this, which I talked about, and on the $10,000 advance and/or grant, no guarantees required. So it's really an emergency infusion of cash to cover you right now. Okay. All right.
David, I got a question on this slide.
Sure.
The question is, who should people work with on securing some of this aid? Do they work with their bank? Could they contact your firm? Who would they work with?
Great question. So we're going to cover some of that a little bit later, but specifically on this question, the PPP, you need to start with your bank, right? There's been a lot of press, particularly if you're one of the bigger banks like Wells Fargo, Chase, and Bank of America. There's been a lot of press like, hey, they're out of money. They're not lending anymore. That's not true, right? So it was probably what happened with the banks was they hit some regulatory caps, some of which were in place as a result of the mortgage crisis 12 years ago. And a lot of those caps have been waived at this point, specifically around being able to support this financing. So typically there are 800 approved SBA lenders out there. You're going to want to ask your bank if they are an approved SBA lender. The big banks are. But you want to, if you're dealing with a smaller bank, you want to ask them if they have that ability to do with the SBA. If not, we can refer them to a bank that has it. The bank is a bank that is accepting new customers, but typically their annual payroll probably needs to be over $2 million, and they also have to be willing to move their operating accounts into that particular bank. But for now, I would start with your existing banking relationship on the PPP. The Economic Injury Disaster Loan and the EEIG is an online application process. And if you kind of Google disaster.gov, you'll see that you should be able to navigate to that fairly quickly, or Google any of those things. And we'll share that. We'll be happy to share that link as a follow-up to this as well, so people can do that. And as a firm, we are offering to help clients and new clients as well, anyone out there with either one of these, any of these processes. We have an opportunity to do that. We'll cover that towards the end of this. Okay, I'm going to keep going if that's okay, because I want to make sure we cover some of these other things. Hi, Jen, you want to talk about the guidance on the PPP loans?
You bet. Okay, so, and I will start by saying what David was talking about with the banks is the right thing to do. Check with your local and your banker, the person that you have the relationship with, first about the PPP loans, because yesterday I thought that this was all going to be over and done with in a matter of weeks. But remember, if you are a sole proprietor listening, or you are a smaller LLC, a lot of those applications aren't even going to start until Friday. And since they're slowing down the funding for 3 or 4 weeks, there's runway. And they're going to add, we hear, $250 billion to the PPP loan process. So I would not give up on this. I think that you still need to pursue these loans if it's applicable for you. And because of the forgiveness piece, it's a very attractive way to help you get through 8 weeks. Now, if you are doing the PPP loans, there's been a lot of discussion about the confusing guidance about how to calculate your basis for your loan. So there's two numbers I'm going to talk about. One is the loan basis, which is the number you give the bank and then they give you money. And then there's the use of the funds after you get the money. And so there are two calculations here. We'll just start with how you get the money and what math you do. The bank applications don't agree with the CARES Act, which is what's bothering everyone out there. The CARES Act says calculate rolling 12 months from the date of the loan origination, which is impossible for you to calculate. So it's completely impractical. And the banks then said, okay, we'll just make it 2019, which also didn't tie to the CARES Act, but it is easy to use. It is easy to tie to the payroll records. You do need to have documentation. There are people out there just doing crazy math and going, well, I am $25,000 a month, boom, I'm done. That is not advisable. You need to tie your basis for your loan to your payroll records. The reason you have to do that is that when you get the money, you're going to have 8 weeks to show them how you used it, and they need to be able to compare your 8-week post-funding use to what you said you were going to base that loan on. And they're going to look at the payroll records from the 12-month rolling period, and they're going to look at the payroll records in the 8-week period. You want to make sure that those two things are speaking to each other and that they're not completely crazy different, okay? So we're saying use that 12-month period, it's easy. I'm going to throw this at you. In the last less than a week, the formula changed as of February 15th. So I'm going to give you the math, I'm going to give you the formula, but I'm also going to tell you that if you use payroll in a look back period after February 15th, then you have to have two formulas. The formula after the 15th of February is different. It's less favorable. There's a few deductions from it. So I say stick with what you know. The math. Wages are capped at $100,000. So to be clear, if you pay David $120,000 a year in the look back period, that 12-month rolling period, cap that first number at $100,000. That's what you cap. You don't throw out the whole amount, you cap it. You divide it by 12,
hey, Jen,
and multiply it by 2.5. Before you do that, I'm going to add in benefits. Yeah?
Oh, I was going to say, you kind of cut out a little bit. I'm sorry, I know we're dealing with a little bit of a delay. You cut out a little bit on the cap on the, right when you said, if I paid David $120,000, would it be okay if you repeated that one more time, please?
Absolutely. Happy to. So the wages are capped at $100,000. Then on top of that, I add in the benefits that were my cost for David. I don't add in the whole Blue Cross Blue Shield bill for him because usually employers have their employees share in the benefits cost. So be careful. Make sure that you're including only the cost that the employer pays for benefits, and then add, again, only the employer cost of retirement in that 12-month period. When you have the total, which is wages plus those benefits, plus there's a formula that I can share next page that state, you add it all up together, you divide it by 12, you multiply by 2.5, that's your number. If the number is more than $10 million, you go to the lesser number, okay? For those of you who are listening, who are sole proprietors or LLC members, the number, if you're a sole proprietor and you just file a Schedule C, is the net profit from your last year. You take the profit of your sole proprietorship, and that's the number for you yourself, plus any wages you pay your staff. If you are an LLC, you should look at your K1 and see the guarantee number up to $100,000 for any members in the LLC. That's the number. And you have to back it up with that K1. If you haven't filed your tax return yet, this is a great time for you to realize that you want to make sure you have some of the distributions of profit recharacterized as guarantees, because then you'll have a K1 to back up your stance on this loan. The reason I'm saying that is that distributions in an LLC of profit, when you take just distributions, that is not included in the loan basis. So it's very important that you allocate some of the money that you take from your company in an LLC and call it a guaranteed payment. And a guarantee is a salary equivalent, basically. Most LLC owners are not supposed to be on payroll, so instead you get a guarantee. And that's my recommendation. Let's go to the next page, David, so we can break down that formula a little more specifically.
Yeah, working on it. Let's see. There we go.
Hey, Jen, to clarify a point from that last slide, and I think you kind of answered it. We got a question about sole proprietors and whether or not they have payroll records. So this person does not have any W-2s, and I think you just said that that's normal. So in that case, how does that change applying for the PPP loan?
So the sole proprietor with no staff looks at last year's profit and loss statement, which turns into a Schedule C on your tax return. If you already filed it, you'll see it on your Schedule C. And the very bottom line number is your income. It's your wages. That's your number. And if you haven't filed your tax return yet, you need to have your P&L for last year finalized, and that bottom line number is your salary, which you would cap at $100,000. And that number is what goes on your tax return. So that's how you're going to back yourself up. Here's the math for payroll costs. Remember, the CARES Act intent is to help you pay people, including yourself, costs included. So that means benefits and retirement on top. So you take these numbers, the salary, the tips, vacation, those top three things are always in your W-2s already. It's already in your payroll. If you're a restaurant or somebody like that, or somebody who takes tips, you add it in. If you paid vacation or parental leave, it's already been booked on your payroll journal. So this is very simple. It's not like you add vacation pay on top of salary, because it's usually already in it. The only thing you would take out is if you paid someone for it's called an FFCRA leave, which you probably no way could have done because they aren't even happening until April 1st. So people get caught up on that, ignore it. If you look at your payroll reports and make it simple on yourself, then you add your healthcare and your retirement that you paid. And the last trick here is you add in the employer, state, taxes. So that's usually unemployment. You do not pay, in the bottom part of this screen, you do not pay any comp in excess of 100 grand. You do not include contractors. There was a lot of conflicting information coming from the banks, primarily screwing people up. Contractors are not eligible to be included in your basis at all, period, end of story, never, ever. The other thing that's not included is your portion of the Social Security tax. So on top of wages that you pay people, you have to pay your half of Social Security, but you do not include that in your loan basis. If you have someone outside the United States that you're paying, you do not include them. This is all a United States benefit. They shouldn't even be on your payroll anyway. This is sort of silly. If you have a foreign person on your payroll, my assumption is that they are on your W-2s and they have a work visa and they're legal to work here. So they would already be included. You shouldn't stress about that. The last couple points here are just about excluding the family first wages. This may become more relevant in second quarter if they have a second phase of the PPP. At this point, I think it's not even relevant. My last point, again, just to confuse everybody, is that after February 15th, the math that I laid out above changes and it gets less. You actually have to make some deductions from your loan calculation. And it's a silly formula, but you have to deduct even your employees' costs. I'm not sure why they did it. I think it's because they're afraid people are going to double dip and they're trying to make it harder math. So stick to the simple stuff and you'll be perfectly fine. Are we okay to move forward?
Sounds good to me. Here we go.
Okay.
There we go.
All right. So then you move into your PPP. They give you your money. Again, we're thinking that's going to be 3 or 4 weeks from now. The big deal here is that they give it to you if you show them that you use the money on what they want you to use it on. And what they want you to use it on is payroll and anything connected to payroll. So you want to plan to use the money for payroll, rent, and utilities. So even though rent and utilities were not included in your loan basis, they will allow you to use the loan proceeds for rent and utilities. They will also allow, if you own the building that you're in, and there are a lot of post-production companies I work with, they own their building. You can use the proceeds to pay your mortgage, but only the mortgage interest is going to be forgiven, which is interesting. They do not want you to use this loan to refinance debt. That's really all they're saying. They want you to use it to operate your business. When they test you on that 8-week period, they want to see a couple things, and it's sort of a circular formula, and we are here to help people calculate it. But the first and easiest one is they want 75% of your loan to be used for payroll. And if you don't use it all for payroll, they're going to look a little bit deeper, and they're going to see if you've reduced your head count, because one of the things you put on your application is your head count, and head count is always crazy. We'll cover that too. They want to know if you eliminated a job. Then they want to look at your compensation, and if it's dropped, as most people's are dropping, almost everyone is at least cutting wages if they're not having a layoff too. So they want to make sure you don't drop any individual compensation more than 25%. They're actually going to look deeply into it and say, okay, you dropped Jen's wages by 28% and David's by 15%. The wages that you pay David, even though they're reduced, are eligible for forgiveness. But the wages you pay Jen are not, because it was more than a 25% cut. Now, I want to make sure I say to everybody, if they do not forgive the entire amount, I want everybody not to get all freaked out, because the amount they don't forgive turns into a 1% loan over 2 years. That's not too bad. The worst possible case is that they ask for some of it back. And as long as you still got it earmarked in an account, if they ask you for it back, it would be because you've done something that they really frown on. I can't imagine what that would be right now, but if you refinance debt or you bought a Harley Davidson with the money, they might be pissed. So don't do that. And then we can help with the formula about reduction of wages or headcount. Now, the other really kind of cool thing that they do is they want you to rehire people that you furloughed or laid off. You have until June 30th to do that. So yes, if you hire them at the end of June or the end of your 8-week period, it might be hard to get up to 75% of proceeds, but this will help you get the money forgiven. You might end up with a bigger amount at 1%. But that's the goal. You don't have to keep people right now today. So if you're listening and you're like, oh my God, how am I going to last 4 weeks? You might need to do a furlough, then get your money, then pause and bring people back. But I urge you to make decisions like business leaders should, as if you were not going to get a handout. And then we can help figure out, or you and your accounting team can figure out the best use of funds to maximize the forgiveness. Okay, so develop a strategy. If you're going to furlough people today and hire them after you get your PPP money, think about the date on which you should hire them and how you're going to make sure when you bring them back, they're actually doing work. It might not make sense to bring people back until there is work for them to do. And as Ryan and David both mentioned, it changes every day. I think there will be legislation to cut everybody a little bit of slack if the economy is still very sluggish in June. I'm wondering and expecting them to release guidance that says, okay, it doesn't make sense for you to rehire people. They're out there on unemployment. We're already paying for them, me, the government, I'm saying. Let's just let everybody have another month to gear back up. We'll see what happens. The loan documents are going to be interesting, and formulas are going to be released to us, and we'll be able to do complex and circular math to figure it out. Keep going.
Yeah, I just want to hit, because you were cutting out on a couple things. I think that's really important to know that the guidance is continuing on a daily basis and updates to the overall process. So we wholeheartedly agree that this is going to evolve over the next several weeks. Okay, go ahead, Jen. You want to talk about some of these other impacts?
Yeah. So those of you who have several companies, or maybe you have an investor who's affiliated with you, you need to pause, make sure you qualify for the loan. If you own more than 50% of two different entities, the general rule of thumb is both entities have to apply as if they were one. And then you have to satisfy the less than 500 people test for these loans. As long as you have less than 500 people on the two together, you're fine. If you're applying for a loan, you will have to say, I own more than 50% of another entity, and then they're going to stop and ask you what's going on. So think about that, especially if you're part of a large group where you might have an investor that invests in a whole bunch of companies. Some of these investors want to know that you're doing this, and some of them don't like it. So you need to communicate. Sole proprietors, I was just talking about sole proprietors. You can apply starting Friday. And that's why a 1099 recipient cannot be included as an employee on someone else's application. Sole proprietors apply on their own. And an LLC that only has one owner member is treated just like a sole proprietor. If you are an LLC with multiple owners, remember that your guarantee payment is your loan basis. And if you're not on payroll, it doesn't mean you can't be included in the formula, providing you get a guarantee payment and it shows up on your K-1. And then the last thing is, if you are involved in real estate, there are some complicated rules there about passive income, they call it, which is basically you're not out there earning it, you're just sitting or collecting rent and not managing it. That doesn't qualify. You have to actually be managing a property and you have to have employees. So it probably isn't super pertinent to this crew, but I wanted to mention it.
Okay, I'm going to move ahead.
Okay, for those of you who are listening, if you have already applied for your PPP and you're freaked out about the formula I just said, I think it's okay, keep it going. Don't retract it, you want to stay in line. I want to make sure everybody hears me say ADP, Paychecks, Gusto, JustWorks all had reports that were wrong. So they were issuing guidance to all of their clients and saying, hey, here's a nifty report. We looked at those and we actually created our own spreadsheet and calculator because they were 100% wrong. They were all doing it differently. They've tried to correct themselves this week with limited success. I saw one processor correct themselves on Monday and then make it wrong again by Wednesday. So if you're going to do this, do your own math, create a spreadsheet about those salaries. We can help you, of course. And I want to mention two other programs. If you're thinking, I'm not going to get the PPP, I'm too late to it, if you just don't want to do it because one of your owners doesn't want you to do it, there are two other programs that are available to you. The PPP and the SBA loan programs are only one part of the CARES Act. So there are other parts. You can also, if you don't do the PPP, you can defer your payroll taxes. This doesn't mean you get a total 100% never pay. A deferral means that you just stop paying your 6.2% on top of wages right now. And you do that all year long. At the end of the year, it becomes a loan. They tell you about it, and they ask you to pay 50% at the end of 2021 and 50% at the end of 2022. This is a free loan from the government. So if you don't get the PPP, or you think that you won't, or don't plan on it, you should do this, and you should do it right now. And you should tell your payroll company to do it for you. If anybody gives you a hard time, let me know, because we have an HR and payroll team that knows how to arm wrestle with them. And then the second thing is this really powerful employer retention credit. If you are listening to me and you have less than 100 people, it's really good for you. If your business has just really suffered, maybe you're an experiential agency. If your business has suffered horribly, you can get a $5,000 credit every quarter for every person that you continue to employ. So this is for those of you who keep people on your payroll, even though you can't really afford it, because you know your people, you're just doing your best. They want to reward you for that behavior. They want to give you $5,000 per person per quarter for keeping people on. This became a program on March 12th. So if you went off a cliff on March 13th, like many of my agencies did, you're eligible to take this for the last 2 payrolls of March. And you file a form and they send you the money, or they apply it to your payroll this quarter right now. So again, this is a very important tool for you, and it will save you payroll tax money, and it's immediately going to impact your cash flow and help you. You cannot do the employer retention credit if you are doing the PPP. So there's help either way. It's coming in some form for everybody. All right, let's go to the next slide.
So just to repeat that, Jen, you cannot do the employer retention credit if you are also doing the PPP. Is that correct?
That is correct.
Great. Okay, so I'm going to talk a little bit more about the EIDL loans. I've covered a lot of this, but this is really, we're starting to get a lot of questions about this because there's many firms are already in the queue on the PPP. I think the number one thing to take away is, even if you haven't kicked off the PPP or applying for the PPP, or you were thinking about it, you can do both at the same time. So as mentioned, this loan is up to $2 million. The application program, and I actually chatted the link to Ryan in this as part of this seminar today, so we'll include that in the information. But the same application process is in place right now for both the EIDL, the Economic Injury Disaster Loan of up to $2 million, and the $10,000 advance, and it's on the SBA website. The applicant just needs to indicate that they're also applying for the $10,000 advance. You'll see it when you go through the workflow. The $10,000 advance will fund, the applicant is supposed to fund it within 3 business days. That's not happening right now. I would probably expect several weeks. All the information required to start processing an economic injury disaster loan and the $10,000 advance are included in the online application. As for the loan itself, if there's additional information or documents that are going to be required, then the SBA loan officer will contact the applicant within 2 to 3 weeks, right? So the SBA, so we actually were on the phone with the SBA, and the SBA representative could not provide a list of commonly requested documents. So again, historically, the EIDL required a number of documents, a recap of how you've been impacted by the business, tax forms, current financial information, financial projections. You know, one of the things that we're telling clients, whether it relates to the PPP or the economic injury disaster loans, is be able to kind of forecast out what your impact, your cash flow impacts are going to be to the end of the year, right? All the way through December. I know everyone's very focused on kind of this June 30th date, but it's really important that you guys all look out towards the end of the year, all the way to, I would say, the end of December, and take a lot of these opportunities into consideration. So, and right now, there's no, we actually tried to get in touch with, just going back to the EIDL, we did try and get in touch with the loan officers, but the SBA is currently handling about 30,000 applications a day right now, and I know they're really trying to ramp up. Just to kind of give you some context, the SBA, across their 800 SBA lenders in a particular year, would fund $50 billion over 12 months. So now they're being asked to basically fund, with the approved funding of $250 billion, or the at least the requested of funds of $250, that's $600 billion that you're trying to get out into the marketplace in a very short period of time. They're playing catch up, like a lot of us are as well with this. So if you, as Jen said, if you're in line and you've already applied for an EIDL loan and you've clicked the $10,000 advance and you've got your confirmation number, be patient, right? If you applied a loan from the bank and you've gotten confirmation that your application's been accepted, be patient. It's going to take some time to get through this process. Let's see. Anything else I need to cover on this? I think we're good. Jen, did I miss anything?
I don't think so. I think the $10,000 loan advance is always very interesting to people, because if you apply for an EIDL and you get shot down, I want to underscore that the $10,000 is forgiven. So you don't really have anything to lose if you apply for an EIDL and you get the 10 grand. I think you're good. You're going to get that first. Yes, it should be 3 days, but it's not. But it's faster than anything else. So I would pursue that.
Yeah, it's another thing I've shared with, particularly, I know a lot of companies that are on this work with a lot of independent contractors, and I've coached up other clients and on other conversations to be able to share that kind of information with your independent contractors, because particularly if they're Schedule C, filers, they can go and apply for that as well. So it's, again, they can at least get in the queue, because it does, they can at least be eligible. Okay, doesn't hurt to try. All right, I'm going to go to the next slide. Okay, so not sure where to start. So this is kind of the simple summary, right? And Jen's going to chime in here as well, but really it's start at the beginning, calculate your loans. Like we said, it's possible that you're going to get both the economic injury disaster loan and the PPP are both relevant for you. Make sure you contact your bank for the PPP and you get your application in quickly. If you're going for the EIDL, get online and go through the application process as well. One caution on the EIDL that I didn't mention is at the very end, and I've gotten a lot of feedback on this. It does ask, like, once you click the $10,000 advance box, there is something at the end that asks for very personal information, like your routing number, your bank account, and the name on the bank account. Fill that in, because that's how they're going to get their money to you quickly. There's been some questions on, is that secure and is that legit? The answer is yes, it is. And then what about this, Jen? How about planning ahead for the PPP for forgiveness? You want to talk about that a little bit?
Yeah, I'm going to sort of repeat what I was saying. I'm sorry about my internet connection, guys. It's horrendous. For sure, you need to plan ahead for what you're going to do with the money so that you can maximize the amount that's forgiven. So, for example, if you have other ways that you can borrow money or a line of credit, you want to make sure you have that money lined up too, or the EIDL money, so that you have piles of money allocated for certain things. The PPP money needs to be used for payroll as much as possible and for utilities and rent. And no, you shouldn't save up all your rent and pay suddenly 4 months worth of rent in that period. I think they might notice, although some of you are probably deferring rent or negotiating rent. That might be the time in which you make 2 healthy rent payments where you do catch up. So those are the kinds of strategies to think about. You should also be thinking about rehiring strategies, which is the whole point. They want this money to help you rehire and return people to your payroll. And they fully know that during the month of April, people are still going to be laying off. So it's important that you hear this. Just because you're applying for the PPP does not mean that you shouldn't be temporarily furloughing people now. You have time to do that and save another month of your hard-won capital. And the reason I encourage you to think these very difficult thoughts is that you're going to get 8 weeks of money from the PPP. If you have a furlough now, you've just bought yourself another month of capital. And it's very likely that if we're all back to work, say in June, let's be realistic. I think June is not silly to say. That means we're revving back up in June, and it is currently April. So we have April, May, and June minimum that we have to cover, never mind that we probably had to cover a lot of March. So think about the fact that the PPP covers 2 months, and there's no doubt in my mind that you need at least 3 months worth of capital. So you can borrow some from the PPP, and you might need to also think about some cash cutting moves. And obviously, unfortunately, that is your staff. but we're figuring out ways to bring them back. Do not forget that if you furlough people or lay them off, they're eligible for unemployment. And unemployment through the end of July, and only through the end of July, they're adding $600 a week to the unemployment for anyone who applies. For a lot of people, that means they're going to get $1,000 a week. So, and also they're getting $1,200 from the government. So if you're heartbroken at the thought of pushing people out the door temporarily, remember you can do a furlough. There is required documentation, and our HR and payroll teams are doing a lot of that for small businesses that says, here's what's happening, and you comfort them that they're coming back. And then you know that you're sending them off to unemployment that is more than doubled in most cases. And it will buy you a month on the back end while you rev back up and get up to full steam again. Okay, so really be sure that you're thinking these thoughts as if you were not going to get a loan at all. That's how you need to think about it.
Okay, let's go on to the next slide here. So we've talked a little bit, and I saw Ryan chatted out our link to our site and also the COVID-19 relief.sba.gov link. So here's a way that we're helping folks. I'm not going to go into a lot of details on here, but basically there's kind of three ways. One is just kind of client consulting that we're doing for our clients. If you need help with the PPP or the Economic Injury Disaster Loan application, there is a link. We've got a calculator that's been vetted. Believe me, it's been vetted over the last several days and over the last week as things have changed. We can actually help you gather and organize any of your application materials, any tax returns, anything that may be needed by the bank. The bank's requirements are different bank by bank, we're finding. So just you're going to have to be able to respond, and we can actually work with you to help do that. And then on the back end, which I think is going to become more and more important as we go forward, is the PPP forgiveness and the Economic Injury Disaster Loan compliance management. So whatever those requirements are going to be, really help with the estimated forgiveness calculation, making sure we can work with you to help create a plan to kind of maximize the forgiveness. We can gather and help manage the use of funds. The banks typically set up, and I know Jen kind of describes this, the banks will typically set up a separate account, like they'll have an operating account and a control account for this use of funds, which really it's kind of like a construction loan. You basically kind of apply back and be able to kind of summarize, these are the types of funds that we're going to be using. This is what we're using the money for, and kind of be able to manage the loans that are eventually funded to the various businesses. So just be mindful that's out there. That's potentially how banks are going to manage this. We can help with that process. And then also, we're also going to be rolling out very shortly as well. We can help with the Economic Injury Disaster Loan applications, particularly as that begins to evolve over the next several weeks as well. We're happy to also kind of jump on a call with clients or new clients, anybody really, and we've got a process to be able to get you engaged quickly and help you through that process if you need it. Okay. All right, and then we'll also send out this link as well. You can see the link at the bottom. We've got a bunch of resources. There's a bunch of other tax implications as well in this that'll certainly be impacting 2020 tax returns. Our tax guys are really getting completely up to date. It's important, particularly in terms of cash flow planning and out towards the end of the year. So you can access the resource center here. That's open to everyone. So please, Ryan, when we're done, we can share that link as well.
Yeah, when we gear up, you guys, we're going to be doing a lot of tax planning. I know that Ryan said there were people who, own smaller businesses on this call. I wanted to say that if you're used to doing tax planning for yourself in the middle of the year and doing estimated tax payments, or maybe you're an SCorp and you put yourself on payroll and you've taken yourself off payroll, or maybe you're thinking about when to fund your retirement plan for last year or this year. Those tax strategies are really critical. You want to be thinking about it and talking about it now, because if you're a small business, everything that affects the owner has this really intimate effect on the business. So there's individual help in the CARES Act as well, that if you're a small business, the individual help directly impacts what you can do in your business. So our tax team work with us a lot when we have our small agencies, for example. The owners need to have a cash flow management strategy on the personal side and on their personal taxes that supports the business. So when you go to our resource center, there's reading there. You don't have to do anything but go there and you'll find papers that you can read. You'll be able to see who is writing about tax strategy and planning. It's pretty easy to find someone who's an expert through that site. And also just stuff that you can read on your own and figure things out. If you're a DIY person, this is a great place for you to go.
Okay. Ryan, I'm going to kind of, Ryan, I'm going to kind of turn this back over to you. We kind of had some FAQs. We're going to defer to you and how you kind of want to go through this, Ryan, because I know you've been collecting some questions along the way.
Yes, thank you. And thank you both. This has been great information. I do have a handful of questions here. So let's get to the live questions first. And then if there's time left, we can go through the FAQs on the slide. The first question I want to start with is, should a sole proprietor file for one of these loans we're talking about, or should they file for unemployment?
You can do both. So my answer is yes and yes.
Great, okay, thank you. The next question, is there any way to check the status of the EIDL loan in the 10K advance application using a confirmation number?
Yes, probably if you want to call the SBA, potentially the wait time yesterday for our consultant who was on was 40 minutes. I've called and it's been up to 3 hours. Now, what I'm telling people, so that's the only way I'm not aware of any online site yet to be able to kind of check the status. So if you're willing to kind of invest the time to kind of see where it's at this point, honestly, I would coach you guys to be patient. The one trick I would say is if you want to check, wait till the weekend. It seems to be a little bit more accessible over the weekend. I wouldn't do it during the day, but honestly, at this point, I would just wait, be patient. And if you're not hearing, if you get too impatient and you're willing to have enough patience to wait on the phone, you can give that a try.
Good tip. Thank you, David. Another question about the EIDL loan. Someone said that they read the $10,000 is only if you have over 10 employees. Otherwise, it's $1,000 per employee for that loan advance. Is that correct?
So I'll be honest, I haven't seen that. What I would say is it's very clear on the site, though. It does say up to $10,000. I haven't read that, so I can't really comment. Jen, have you seen anything on that?
I have never heard that. I have never seen that. It could be true, but I've never had anyone else tell me that so far. Well, in 2 weeks. You realize this is all 2 weeks old, people.
Yeah, look, I think, well, I can only speculate, so I'm just going to leave it as I have no idea. I have not heard that, seen that, read that. So if that person has any fact-based information to share, please send it to me. Ryan will be sure to share our email address. Ryan can share our email address. I'd love to see it.
Great, I can do that. Another question here. If they have an SCorp and they showed a loss and there was no payroll, what are their options? Are they out of luck?
Yeah, if there's no payroll for that owner for the loan basis in all of last year and they have a loss, there's no loan basis for the owner. If my advice there is, for sure, you can still apply for the unemployment, and I would experiment with the rolling 12 period and look at the period that you use to make sure. If your business is seasonal, there are descriptions of your formula where you're allowed to use, for example, January, February of 2020. If you're seasonal, there's a period in last year, February to April, that you're allowed to use. So if this is because you had one great period and one really crappy period, just read the instructions and see if there isn't some sort of strategy for you. But for sure, you should have applied for unemployment by now.
Great, thank you. And I think this next question is somewhat related. So this person has a very seasonal business. It's based around two specific conferences that were both canceled because of COVID-19. Would that qualify for the idle situation? And they're saying they are a sole proprietor, they have no payroll, and they would like to use idle money to cover fixed costs that would have been covered by the business that they now won't get because of the canceled conferences.
Yeah, that sounds like a great idle, absolutely great idle opportunity to me.
I agree. There's also, depending if the seasonality is in this, there's you're a sole proprietor. Again, if you can kind of support the payments to yourself during that seasonal time, there is a separate calculation on the seasonality portion of it, which I believe Jen covers from February 15th, 2019 through, I think,
April 30th, I think. April 30th, sound right?
Yeah, April 30th of 2019. So if you can demonstrate in that period of time that you got paid, that you could apply, again, you could apply for both the PPP, which I think would be worth it in your situation, and also the EIDL. And I would go to that online EIDL site right now and get your $10,000 advance and be ready to support your need once the SBA loan officer contacts you.
Awesome. That's all the live questions I see now. If anyone in the audience still has additional questions, we have about 4 minutes left. Otherwise, let's turn our attention back to your FAQ slide, and I'll let you guys speak to it.
I wanted to talk about number one for a second, David. It sounds like the people who are on the line can attest to the fact that their business was hurt or interrupted. You can apply, of course, that's what this is for. You have to attest to the fact that you don't have enough money and that this loan is necessary for you to continue your business. So I try to encourage people to take that seriously. Many people, it's like, are you kidding me? Of course that's me. But there are people out there who have other sources of funds who struggle with the honest reply. If you struggle with the honest reply, don't apply for an SBA relief fund. That's just not for you. It's meant to help the little guy specifically.
Yeah, that's a good point. I think we've got some feedback today that some venture capital guys who have multiple portfolio companies, and if you happen to be one of those and you have access to capital through that channel, we actually have venture capital guys and PE guys saying, hey, make way, don't apply for these. If you need financing, we can provide it to you. So I would say go back if you have another source of funding that you haven't either asked for, or maybe you don't feel you've asked for enough at this point, go back and ask that, because some of the guys are saying, hey, let's stay out of the way. Let's make sure that we're letting the businesses who really need it apply for have access to the funds and to the process.
Right. And the last one for you guys that might be appropriate is if you use a PEO like JustWorks or TriNet, and they have your employees on their payroll per se, you can apply for the PPP. Those guys are supposed to give you a report for your payroll and only your payroll, showing clearly you as the employer, and they are supposed to give you a piece of paper, a letter that you attach to your application that says, I'm part of a co-employer agreement, and they sign it for you. So you absolutely can apply. If you are a production company, there are production companies that are also saying they'll do this for you. CAPS, for example, came out and said they would do it yesterday. You have to be careful with that. If you apply under your production payroll, you are going to have to replace that head count. But if you don't have any productions, that might not be workable for you. And the other thing is, if you bill the CAPS production crew back to your client, how are you going to say to the government, I use the money on payroll if you were also paid back for it? So if you're listening to me and your ears are perking up because you are doing productions with crew, you probably need to reach out and get some expert advice.
Jen, I'm going to go rapid fire real quick. I'm a foreign entity. My company's owned by a foreign entity. What's the percent that I should be focused on?
If you're owned more than 51% by a foreign entity, you cannot apply.
Great. Can I include workers' comp in the payroll expense when I calculate my base pay?
No, you cannot. Workers' comp is a company insurance policy, not an employee benefit.
Okay. How do I count my 500 employees is a long answer. What can you summarize it in 15 seconds or less?
It's your head count and the number of positions that you have. It's not the number of W-2s. It's the positions and the jobs that you have. But when you justify your loan, you will be asked to provide full-time equivalents, which is the sum of all the hours that people worked in your 8-week period and the sum of all hours in your compensation calculation. It's not that hard to do. It's all on your payroll reports.
Very quickly, do I need to file my 2019 taxes before I apply?
No.
What banks are doing this? I can answer it. There's 800 SBA lenders out there. Ask your bank. The big banks are all doing it. That's the answer to that. Can I use PPP loan proceeds to pay off debt? What's the quick answer to that, Jen?
No, it is not a refinancing opportunity. It's specifically to pay payroll.
Can I have both SBA loans and EIDL and also the PPP? Answer is yes. And the last one, the other one I think I skipped over was number 3. Does the $100,000 payroll cost per person limit me to exclude that person's wages entirely, or do I only exclude the payroll expenses over the $100,000 per person? The quick answer is?
I only exclude payroll expenses over $100,000.
Awesome. And then number 11, the last one, I've already submitted my application for it. What do? Stay the course. Hold steady. I used my Disneyland reference yesterday. You've been waiting in line at Space Mountain, and something else looks good to you. Stay the course. Go all the way on the ride. Don't get out of line.
I like that analogy, David. We have another live question also. If they had a good Q1, but they're expecting to slow down in Q2, should they still apply?
My answer is yes. And if they miss out on the PPP, remember, if your quarter just drops like a ton and you miss out on the PPP, you can get the employer retention credit, which would be a very powerful help to you also.
Agreed.
Great. Well, I'm going to move us to wrap up now as we're a few minutes over. Thanks to both of you again. I think this has been incredibly helpful, and I hope that the audience feels the same way. We will share out this information afterwards, and the session has been recorded, and so we will also make the recording available if you want to watch it again or send it to somebody who was unable to attend. Jen, David, thank you so much, and I hope that everybody stays safe and stays healthy.
Thank you, Ryan. Everybody stay safe.
Thanks, Ryan. Thank you.
Bye-bye.